Buying altcoins early has always been one of the most exciting, but also one of the riskiest strategies in the crypto world. When we talk about altcoins, we mean any cryptocurrency that is not Bitcoin. Many of these projects emerge with bold visions, innovative technologies, and promises of solving real-world problems. And for early investors, the rewards can sometimes be life-changing. But with these opportunities come very real risks that can lead to huge losses if you are not careful. In this video, we're going to explore the potential opportunities of buying altcoins early, the risks involved, and strategies to make more informed decisions. Let's start with the opportunities. The first and most obvious opportunity is massive profit potential. When you buy into an altcoin early, you are essentially entering at the ground floor. If the project gains traction, attracts a community, and eventually gets listed on major exchanges, the price can increase dramatically. Some of the biggest success stories in crypto come from early altcoin investments. For example, those who bought Ethereum during its initial coin offering in 2014 paid less than $1 per token. Today, Ethereum is one of the largest cryptocurrencies in the world. Similarly, projects like Cardano, Solana, or Avalanche rewarded early backers with exponential returns once adoption grew. The second opportunity is diversification. Bitcoin dominates the crypto market, but altcoins often target specific use cases such as decentralized finance, gaming, metaverse projects, or cross-border payments. By buying altcoins early, you may be able to diversify into innovative niches that could play a major role in the future of blockchain technology. The third opportunity is community and network growth. Many altcoins are not just digital assets, they represent ecosystems. Buying in early often gives you a chance to participate in governance, staking, or contributing to the project. This can be rewarding both financially and intellectually, as you become part of shaping the future of the technology. Now, let's balance this with the risks because they are equally important. The first and biggest risk is failure. For every Ethereum or Solana, there are hundreds of projects that disappear within a few years. Many altcoins lack strong fundamentals, a clear use case, or a committed development team. In fact, most new cryptocurrencies launched during hype cycles eventually lose value or become irrelevant. The second risk is extreme volatility. Early-stage altcoins often experience dramatic price swings. While this can create opportunities for profit, it can also wipe out investments overnight. If you cannot tolerate high levels of risk, early altcoin investing may not be suitable. The third risk is scams and rug pulls. Unfortunately, the crypto space has its fair share of bad actors. Some projects are launched purely to raise money and then vanish, leaving investors with worthless tokens. The lack of regulation in many regions makes this a serious concern for anyone considering new altcoin investments. The fourth risk is liquidity. Even if you buy an altcoin early and the price goes up, you may not be able to sell easily if there are not enough buyers on exchanges. Low liquidity means your ability to cash out at the right time can be limited. So how can you approach buying altcoins early with more confidence? Here are a few strategies. First, always do your own research. Look into the project's white paper, the background of the development team, and the real-world problem the coin aims to solve. A strong project usually has a clear vision, transparent leadership, and active development updates. Second, assess the community. A growing, active, and engaged community is often a strong indicator of long-term viability. Social platforms like Twitter, Reddit, and Discord can give you a sense of whether people genuinely support the project or if it's just short-term hype. Third, manage your risk through diversification. Instead of putting all your money into one new altcoin, spread your investments across a few promising projects. This way, even if some fail, others may succeed and balance out your portfolio. Fourth, invest only what you can afford to lose. Early altcoin investments should be treated more like high-risk venture capital bets than guaranteed returns. You should never invest money that you need for essential expenses. Fifth, have an exit strategy. Many investors get caught in the trap of holding forever, hoping for even bigger gains. Setting targets for taking profits can protect you from market downturns. For example, you might decide to take out your initial investment once a coin doubles or triples in value, and let the rest ride as pure profit. Finally, keep an eye on regulation and market conditions. The crypto industry is evolving rapidly, and government policies can have a major impact on altcoin prices and adoption. In conclusion, buying altcoins early is a double-edged sword. The potential rewards are enormous, but so are the risks. Success in this space comes from balancing optimism with caution, doing careful research, and maintaining a disciplined approach to investing. If done wisely, early altcoin investing can be part of a powerful long-term crypto strategy. But remember, it is not a guaranteed path to wealth, and risk management should always be your top priority.